Hey, everybody. Welcome. Thank you for joining us here at the Fall 2022 Craft Beer Professionals Virtual Conference and to our session here, Key Performance Indicator Insights, Knowing Your Numbers. My name is Josh Lance. I am the founder and managing director of Lance CPA Group, a virtual remote CPA firm that specializes in doing accounting, bookkeeping, and tax for craft breweries. And I'm excited to be here presenting with you all today. Happy Extension Tax Deadline Day for those who celebrate and who got the returns in at the last minute last night. I was in your same shoes as well. I didn't do my return until Sunday, so. But we're excited to present this information for you today, talking about key performance indicator insights and making sure that you have the tools and knowledge to understand how you can best understand KPIs and how they best are used within your brewery. If you have comments, questions, put them in the comment box. Happy to answer as we go through. Also, we will have some time at the end for Q&A as well. So please feel free to drop any of those questions you have, and let's get rocking and rolling here. So a little bit of our agenda, we're going to talk about some accounting best practices for craft breweries before we get into actual KPIs. And I'll tell you a little bit of reason why we do that first, but we'll do that. We'll talk about KPIs for success. I'll even share some benchmarking data that we do when we put together, just so you can kind of get a sense of another way to look at KPIs, and then how do we make sure we're actually doing what we're supposed to be doing when it comes to your accounting. And in working with breweries, we worked with over 100 breweries in our firm, and we know that a lot of breweries, the accounting element is still held by the owners or someone else who maybe that's not their kind of profession, or they don't necessarily have the time to do it. And as we talk about KPIs, we talk about how we best use that to manage our business. We need to make sure we're doing accounting on a regular basis. So we'll talk through how that looks as well. All right, so let's talk a little bit about accounting best practices. So when you are doing accounting for your brewery, it is important that we follow some best practices to ensure that ultimately we're getting the data that we need in order for us to best manage the brewery, in order for us to have the data we need to do KPIs. And ensure that we're doing the right things for this part of the business. So there's kind of 5 big accounting best practices here, and I'll kind of run up through them quickly, but then we'll go into a couple of these more in deep detail here. So the first part is understanding where your data is. When it comes to accounting, one of the big things that you do in your accounting process is collect and analyze the data that you have. And it's important to know where that data resides, right? So the data is not just in your accounting system. You're gonna have data in other sources and other places. And so ensuring that you best understand where that data is helpful, because that may give you the data you need to best, handle your accounting tasks that you need to do, and make sure that you have completeness of information. Just going by what's in your bank statement helps, but that's not all of what accounting is. And so you may be missing key data that can radically change what your financials are saying, and as a result, change how you manage your brewery. So we'll dive deep a little bit into that. Also, when we think about accounting best practices, it's best to do all this in the cloud. We're past the days of doing things in QuickBooks Desktop and other desktop accounting softwares. If you're still doing that, I would highly suggest to migrate. So if you're on QuickBooks Desktop, migrate to QuickBooks Online or Xero. That's going to make things a lot easier for you, because those cloud-based accounting systems, we can get to talk to each other and really ensure that we're not doing a bunch of manual data entry that we don't need to do, and instead have the systems do that. And that's also where integrating our systems comes into play. I'll go over kind of a sample mapping of what a brewery integrated system looks like, so you have a kind of a viewpoint as to how we best set up systems and how they talk to each other. Because if we do that right, again, that saves us some time, but it ensures we have the best data possible when we start actually analyzing financials and analyzing KPIs and things like that. The fourth thing is process. We're going to some of the process here of having a good accounting process is important, just like a good sales process is important in your brewery. And if we don't have that stuff documented, and we don't have that stuff, understood by the people doing it, what ends up happening is it doesn't get done the right way each time. You deviate process, you have different information, things start to go off the rails. I say all this just from experience and working with the breweries where they didn't have a good process in place, or the data was all over the place, and they hadn't kind of collected all that together. And they didn't have a good grasp what their actual financials are saying there. And finally, we want to report and ask why. So, it's great that we pull that data into the accounting software and we have it there, but if we don't do anything with it, then it doesn't serve us any purpose. And so we need to understand what the accounting data is telling us, and then ask the questions of why around that. So again, we'll dig into all 5 of these things here, but again, it's important that we start here first. And the reason is we were working with one brewery a couple years back, and they were really interested in understanding KPIs and using those KPIs to best manage their brewery. And so we started to engage them, talk with them about, okay, let's figure out what those KPIs are, and okay, where we can get that data from. And they had kind of blank stares and blank faces there, because they thought we could just conjure that information up, right? And they didn't have a good accounting process in place, and their accountants, was 6 months in arrears, and even then it wasn't really accurate. And we can't do KPI analysis. We can't understand those key performance indicators if we don't have good data underlying it. And so like, I think I would like to say I can do financial magic, but I can't just conjure up your KPIs out of nowhere. We have to have the underlying data there. If we don't have good underlying data, either then our KPIs are going to be garbage, or they're going to tell us the wrong information, and we're going to make the wrong decisions in our business as a result. So let's talk about data sources. And you have data sources all over the place in a brewery. There's a lot of it. There's a lot of it in systems that aren't necessarily go hand in hand with each other, but it's important for us to understand what that data is, because this really helps us drive our accounting and also helps us drive our KPIs. And so looking at something like the point of sale system, right? So that's going to have a lot of your taproom sales activity. In an ideal world, we'd have that integrated in with your GL software, or at least you're doing manual journal entries on a monthly basis to kind of put that data into your GL software. But that has a lot of good data for us. It tells us, when things have been sold, and how does this Saturday compare to the last Saturday compared to the last Saturday before that, and it gives us some good analysis of that. It gives good analysis of what product types are selling in our tap room. Why are they selling? Is someone buying 3 of those every time they come here? Why are people making those purchasing decisions, and how much they're spending on a given ticket when they show up at our brewery? And so that point of sale data is important. That point of sale data is important from accounting perspective, because we're going to get a lot of good data out of that, but also from a KPI perspective as well. Payroll systems, another big one. You have labor is going to be one of your biggest expenses that you have in your brewery. And understanding labor and understanding labor trends is huge. And so your payroll system, again, treasure trove of data there, probably more data than you know exists in that. And we can get a lot of information that can go into, again, your accounting software, but also you can use for KPI purposes. And we can look at, all right, what is, for a good example of this, and this is when we worked with a brewery here just recently. We were kind of helping them kind of, understand their people function within their business. They had a lot of people that worked there for a long time, but they're starting to come in some turnover issues, and trying to figure out what's going on. And so we kind of linked their payroll system and their accounting system together and ran some reports out of there. And one of the insights we got from doing that, which is a good KPI insight, but it was also good because we had the accounting done right, is that, for employees that have been with the business longer than a year, the average time they stay with the business is about 4.5 years, which is huge. This brewery's been open for 6 years. So that's really good, right? So if people can stick for at least a year, great. They're staying for a long time. For people who can't stick a year, right? Like, there's a lot quicker turnover. And you see a lot of turnover for people who, haven't been here for a full year, right? That's the turnover issue. And so you dig into that data a little bit and you see, like, hey, maybe we have a culture where people have been here for a while, like, they get it, they're there, but it's hard to embed the new people into that culture. And we need to figure out why that is. And so, again, great data, accounting system, payroll system, put that together. We can get some great data out of that. That really helps us best, figure that stuff out. And that was an insight they didn't really quite grasp right away. But once I showed that to them, it opened their eyes and said, oh yeah, we have trouble keeping people that are new to us with us. But the people who have been with us are ride or die with us, right? And so, how do we get the new people to become, people who are going to stick with us for a long time? And so that's a challenge for them. That's a culture challenge. That's a way of, hiring, but that's a business decision thing that came from the data, and having good data allows us to do that. Other data source, big data source, obviously your inventory brewery management system, Ecos, Beer 30, whatever you use, it's good. Now, if you use Excel, we're going to be limited to what we can do with that data. And sometimes Excel data is not all that accurate or hasn't been updated in a while. So using these systems are good. It tells us a lot of things. It tells us like costing for a beer, right? And so how much does it cost to create this lager versus to create our double IPA versus to create our stout, right? Like we need to know that information, right? That helps us make better decisions. And in some cases, we've done that analysis and looked at that data and compared it to our sales data and saw that, hey, we're selling some beers at prices that we're not making any money on, which is not good, right? You're doing a lot of work to get no profit. But it's because we didn't really have a good grasp of, okay, that beer, off the top of our head, we didn't think it was gonna be that costly, but it's actually really costly for us. And our price doesn't reflect that cost. And so understand that, and the profitability there becomes a huge deal, because if we don't understand that, then we're going to be making some decisions where, hey, this beer is a great seller and we're always moving it, but maybe we're not getting the right margins on it. And we have to fix that. So again, that becomes pretty important there. Also looking at our sales and production levels, right? Like, how long does it take to sell through some of our items? From a production standpoint, what the kind of max capacity we have to actually sell stuff, right? We can kind of figure that stuff out too, which is super helpful there. Other places for data. Again, some of these places you may not look or you may not even have per se, but good places for data. Bank data obviously gives you a lot of information, helps us assess that the information we have in the accounting software is complete. So the process of reconciliation, which you do in your accounting process, is a process to ensure completion. And again, run into a lot of breweries who've been trying to do this themselves, have never actually reconciled an account before. And they don't know, okay, well, maybe I'm missing data here. And that's a process that we can do to ensure we have the right data and ensure we have completeness, which again helps bolster the data that we're looking at. Counted data, you already may look at that stuff, gross profit margins at large, net profit margins, good data there, but we can also see some good trend data, month by month, sales, month by month, activity. We can see some trends of what's happening. Again, that really becomes helpful in the KPI situation. And then a CRM, right? So for your salespeople, if they have a CRM they're using or some tool that allows them to see their customer sales pipeline, how often they've sold things, where new accounts coming on board, right? Again, that can become helpful data from a KPI standpoint and from an account standpoint for us to understand. That data is all good, but if they're all in silos and kept in silos, then we have some problems. And so we need to integrate that stuff in here. And so again, that's where the cloud-based accounting tools and cloud-based tools that you have make a lot of sense, because they easily integrate with each other. And this is kind of that chart here, what that looks like, right? And so this is a sample brewery where we have our point of sale software and activity highlighted in the grays. We have accounts payable in the yellows. We have all of our brewery management, inventory management in the purples. We have OCR and document fetch and things like that, statement fetch in the oranges. We have our payroll in the greens. We have time tracking in the kind of reds there, and then finally our GL in the blues. And so there's a lot of different systems here. All these systems integrate, and usually your accounting system is the point that integrates all those things, right? It's the hub of your data. And so if we can integrate all these different things into it, that really allows us to, again, have that good data all in one spot. So then we can go and do those KPIs and really be confident in what that data is telling us. So to the extent you're not integrating stuff, you should. If you're not sure how to integrate or the best practice or what makes sense to integrate and where this does not make sense to integrate, always feel free to reach out to us. We'd be happy to lend our expertise in doing this for a multitude of breweries, of going through this process and mapping out, okay, what systems are going where and how is data flowing in and how is data flowing out and how do we make these best decisions here going forward. Talk about process. Process is huge. Accounting, you got to think of accounting as a core process in brewery, just like brewing beer, just like selling beer. It is that critical. Breweries are regulated industries that have a higher reporting that they need to do, especially with the TTB and with their state liquor agencies. And so having good accounting helps us do those things better, meet those compliance goals better. But it also helps us make sure that we're actually having data we can rely upon. And that's, I think, the biggest issue where we run into breweries who are trying to do this themselves, is they don't have a good process in place and it doesn't get done timely. And there's not a repeatable way of doing this And as a result, we're not getting the right data when we should get it in a timely manner. And it's not helpful for us. And then we can't do KPIs and we can't look at that stuff. And so making this a priority is huge. If you can't do it yourself, you don't have the talent internally, outsource it to an accountant firm like us. Who has that expertise, who understands your business. That makes it a lot easier to get this done in a affordable fashion, but also ensures that you're handling that part of your business just like any other part of your business, the way it should be handled. Again, too often we see accounting is the thing that gets left for last, and it really shouldn't. Because if you're managing your brewery appropriately, you need that data. You need that data in a timely fashion. Finally, we need to take that data, those reports, right? So maybe your accountant sends you a balance sheet, an income statement, and cash flow statement. We got to do something with that, and just filing that away isn't helpful. We need to ask questions and ask why, and figure out, okay, what do we need to do here with that information that we have? So look at that information regularly. That information should be looked at within your brewery, not just at the ownership level, but at the leadership level. So key leaders, key stakeholders in your business who are responsible for different areas of your business, like your head of sales, your taproom manager, your head of production, whatever that may be. They need to be seeing this information too, and need to be digesting it and asking why the information is the way it is, right? So why is sales going down? Why are our gross profit margins shrinking? Why are our labor metrics going the wrong direction, right? Ask those questions, because that will help you uncover things for you to know, so you can actually go ahead and run a business and make the right decisions here. And even taking this to a further level, building a financial model is really helpful, because that data is historical, but we're always looking forward into the future, and how do we take that historical data and plan for the future and use that. And so building a financial model is huge. Again, with a financial model, we can build in KPIs there. So you can forecast out KPIs and say, based on what we know, here's what we think our key performance indicators we're tracking are going to look like. And does that look good or does that not look good? All of that's important here. And get into that process of reviewing reports with your leadership team, asking the why questions, getting answers to that is ultimately going to make you a better business owner. And the breweries we've seen succeed and do well didn't do that because they caught on to a fad and brewed the right beers at the right times. It's because they managed their breweries really, really well. And those people running it, did the things they needed to do to manage it well. And so we've seen breweries that start to struggle and fail, and we can usually pinpoint it's not a production issue, it's not a beer quality issue, it is the people managing it aren't managing it appropriately, right? They're not taking data, they're not analyzing it, they're not making decisions based on it. They're just kind of being reactive to whatever is happening. And it's those breweries that struggle, or breweries that are paying attention to this. We have a brewery that, they're not making fad beers, they're not winning a bunch of awards, but my gosh, they're the most profitable brewery that we have in our portfolio, because they run the business so well. They understand the data, they understand the KPIs, they're talking about internally, they're always looking to improve, and they run a very successful brewery. They're not huge, but they're super profitable as a result, right? And so it's a lot of times breweries get big and they scale because they hit the timing right, or they got into that fad beer, but they're running the brewery totally wrong. And then that catches up to them eventually. You see these breweries that were once great are now struggling and closing locations and trying to figure out life here, is because they just never paid attention to this the way they're supposed to pay attention to it. And that ultimately kind of killed them. So let's dig into the KPIs. So we talked about building that accounting, getting the data together, getting it all in one place and having a good accounting process. Now we can talk about KPIs, because we can't get to KPIs until we have that accounting done right. And so first off, KPI, key performance indicator. And really what a KPI means for your business and why you want to look at it. It's something that highlights to you where your business is going, the health of your business, areas of focus or improve upon, and it allows you to easily digest it, right? Getting a big financial statement with a lot of numbers on it, right? You can get lost there in the numbers, but if there are particular KPIs that can look at that trend line and look at how we're performing, that helps me better understand better, right? And be able to communicate to other people within the brewery as well. And so the KPIs are really kind of functional tool points that kind of orient you to a North Star of where you want to go, and ensure that we're doing the things we need to do to get there. So always going to ask, what KPI should I look at, right? The first thing I say is we don't want to look at a million KPIs. That's too much data. We need to focus on what KPIs matter most at that time. So when we work and do strategy with clients, it is, okay, what are the 3 KPIs that make the most sense or matter the most right now? And those KPIs may be ones we look at for years to come. Maybe they're just KPIs we look at for the next 6 months, and then we feel pretty confident in what that's telling us. And we don't worry about it as much. We look at a different KPI now. Some of the key ones that I think are the bigger ones to look at, and is if you're starting fresh with KPIs, these are the ones to start. Revenue per barrel, COGS per barrel, very high level. It basically kind of right sizes those numbers, right? So instead of looking at, okay, we made $2 million of revenue last year, well, what is that on a per barrel basis, right? And so that helps you understand the shifts of your delivery channels, right? From tap room to wholesale, right? We're going to see that revenue per barrel go down once we go to wholesale. And so looking at that and kind of common sizing that allows us to get more clarity as to our revenue and be able to compare not only to ourselves with a trend, but also to other breweries as well that publish that information, or the Brewers Association that publishes that information, or your guild who may publish that information. COGS is the same way, right? We want to understand, okay, what is that COGS per barrel? What's going into the COGS number? Because again, if we can figure out those two and have a good handle of where those are going and get those going the right directions, everything else starts to work the way it should work. Our gross profit margins look right, our net profit margins look right. And so those are kind of leading indicators there. If we just focus on gross profit margin, good KPI, good metric, but we may miss something that's actually underlying there. So revenue per barrel, COGS per barrel, great. I like looking at the profit margins as well. Gross profit margin is just your revenue minus your COGS. It gets your gross profit, and you divide that over your revenue. That's a good one to look over on a trends analysis, especially if you start to go heavy into wholesale. That number is going to plummet on you, and it's going to be a little scary, but you need to understand that going into it. So, paying attention to that. Net profit margin, right? So that's, are we profitable or are we not profitable at the end of the day, right? And so tracking that as well, right? And then we should have targets around this as well. So when we look at KPIs, not only looking at trends and we want it to go the right direction, but we also have targets of where we want it to be, right? And so like for a net profit margin per brewery, if it's less than 10%, not great, right? Now, if it's profitable, still good. If it's 2%, we'll live with that. But that's not a place of health. We need to be at least 10% to get towards that place of health. And so, looking at those things, saying, okay, yeah, that profit margin is improving, but it's not improving to where we want it to be. It's good to know, right? Cash flow margins, we kind of take that net profit margin, we kind of turn it on its head and look at it just on the cash basis and say, from an inflow and outflow perspective, what does that look like, right? And so is there more outflow than inflow? And do we have cash crunch issues coming up here in the future, or is that going the right way? Helps us understand our cash too. So your income statement is going to show things that have non-cash items in there, non-operational items, but they're supposed to be there. We also want to understand the cash component as well. Another one I like to look at is labor as a percent of revenue. Again, this is one of your biggest expenses, and that's one that can start to get out of hand quickly. And when it gets out of hand quickly, we either have to really hope sales, increase, or we're doing some layoff activity, which is not fun, right? And that's a morale killer, and that kind of sucks for your culture. And so understanding that it's important, right? And understanding, okay, where's that should be, and do we feel comfortable with that labor percentage? Quick ratio is really a balance sheet ratio, looking at, okay, look at my current assets less my current liabilities. Is that in a place where, again, helps us identify short-term cash flow issues in the near future, and make sure that we have the cash we need to pay our bills and cover our operating expenses. And then finally, things that are very tap room focused. If you're a very tap room focused brewery, looking at average dollars per ticket, average revenue on a day, seeing those trends there again. Anytime we look at KPIs, we don't want to look at it in an absolute value. We want to look at it in a trend line, because that trend line gives us more clarity as to where things are going. We can have the greatest KPI for gross profit margin 1 month, but that could be an anomaly. And if we're just patting ourselves on the back, we don't look at it ever again, we may have a problem. So ensuring we see the trend gives us more of a sense where that business is going. Again, context is everything, not in a bubble. Also, don't focus too much on revenue. I did say revenue per barrel is an important one. But again, I put it on a per barrel, right? The count size, and not look at it just the gross raw number. There's a notion of revenue is vanity or profit sanity. And again, to my example before of a brewery that is not very big, doesn't have a whole host, not a ton of revenue. It's got good revenue, but not a revenue that you expect for, a successful brewery, but their profit is great because they manage the business very well. And that's ultimately what we want to get to, right? We can get all the revenue in the world, but if our expenses are exceeding our revenue or we're not profitable, that doesn't help us. So we really want to make sure that, we're focusing on the thing that actually means more, which is profit versus revenue. We also want to discuss the KPIs alongside our financials, right? We don't want to totally divorce the two together. We want to say, okay, here's our income statement for the month. Let's review it. Here are some KPIs that are income statement related, and let's see what they say, and let's see what those trend lines are. Again, helps give us context of those KPIs, but also the KPIs give us context to the income statement as well, or to the balance sheet as well, and gives us some information that we need to know that puts that information that we're seeing in the financial statement into perspective. And so when we track KPIs, again, start with good accounting process. We don't have that. The KPI numbers are going to be meaningless to us. Pick 2 to 3 to start and just focus on them. Track them monthly, track them weekly, whatever you think is best, but track them, report on them, share them with key stakeholders, and make sure you're understanding, okay, why are those numbers happen the way they are? Because that gives us good insight as to what do we need to do differently in our business to improve those numbers. You can use software to track this. We use a software called Fathom, integrates with QuickBooks Online, integrates with Xero, works really well. You can set your KPIs in there that you want to see, and then it automatically will calculate that for you. So you're not having to go through the motions of calculation and pulling that together. It helps pull that together for you. And instead, now you can look at that data and look at that in context. Use your KPIs for accountability, especially with leadership. Part of people being in leadership positions, they need to be accountable to whoever's in charge, but also need to be accountable to their people and accountable to the part of the business that they're running. And so using KPIs is helpful because it's a way to say, hey, Jim, who runs sales, we're really expecting sales to increase 25% next year. Here's a key KPI that is relevant to this part of the business. We're going to track that. If we're not, that KPI is not going in the right direction, that may tell us that we need to make some decisions here on how to change what we're doing in the sales department to make this better. So it gives that stakeholder some, again, common knowledge, right? That salesperson's probably not an accountant, maybe not even likes, financial information and numbers, but that information again is super useful and allows them to know, okay, I need to hit that number. I need to close X amount of deals. Great. I know what I need to do now. Again, watch the trends. Trends is the big part of this. We want to know where things are trending. The trending tells us a little bit more and tells us better data than what the actual KPI itself says. That trend is a good indicator of improvement or non-improvement, and then how we adjust for that. Again, know the why behind this. We need to know why we're tracking those KPIs. So don't just pick revenue per barrel because I said that was the first one on the slide, and maybe that's not the one you should be tracking in your brewery. If you're a fully taproom sales brewery, right, that's maybe not as relevant of a metric. So pick the real ones that matter the most and know why behind it, because you need to explain that to the other key stakeholders, people who are responsible for that KPI, so they understand how they should act with it. And then understand that why really also is understand the KPI appropriately. Again, we're not just looking for a number to show up that's better than the last month or to meet a certain thing. We want a reason why we're doing what we're doing and making sure that KPI reflects that. Another great thing you can do with KPIs is use it for benchmarking data. And so benchmarking is the ability to compare your business, your brewery, to another brewery. And basically common size it, right? So I don't need to know the financials of what that brewery has. I just need to know what their key KPIs are. And if we're measuring the information the same way, now we can compare with each other and say, okay, well, your revenue per barrel is 1,200, mine's 900. Why is that the case, right? Maybe that's appropriate. Maybe that 1,200, they don't do any wholesale sales, but we do some wholesale sales. And if we took that out, maybe our tap room, revenue per barrel is higher than theirs. We're doing a good job, or maybe it's way less still, and we have some room for improvement. We've got to increase price. Maybe we got to rethink how our recipes are formulated. Maybe we need to think about the types of beers we're producing, and maybe they're not selling right, or we're having to dump old beer, or whatever that may be, right? And so we're using that information to get better information and understand it. So this is actually information from a benchmark analysis we did at the beginning of 2020, looking at 2022, looking at 2021 data for a group of breweries that elected to participate in this. Some notes of caution. Anytime I do show benchmarking, I always want to put notes of caution out there because we don't want to take everything for it's absolutely perfect, because there are some things that are variable in this. So one, we didn't perform data on audits of the underlying data, right? The data was provided by that brewery. Two, we were doing our best to compare apples to apples. So sometimes one brewery may say COGS is just raw materials, and the other one says COGS is raw material and brewing labor. Well, I can't compare those two together if we don't start from the same definition of what that is. And so we need to right size that as much as possible and say, okay, well, we're going to look at COGS just on raw materials only. So I'm going to pull out that labor and put it into G&A and do that for my COGS or for my benchmarking analysis. And again, this is point in time related, right? So just because it says what this is today, it's not like that means that that's going to be that KPI forever. And so things change, obviously, and we've seen that change in our world in the last few years. And so, understanding that in this process is important too. So a couple of high-level issues, if we're looking at this stuff and analyzing this in totality, we have a couple things going on. Volume of beer sold increased in 2021 versus 2020, but down historically. We had a lot higher cost. In this case, was driven from packaging and delivery costs on the COGS, particularly in the business in general. Obviously, that decreased margins as a result, right? So we're not selling as much beer. Our margins aren't as great. A lot of breweries may appear cash healthy because they got a bunch of stimulus, PPP, ERC, some other RFs. But that was one time. It was not operating revenue. And so that may mask the actual what the brewery actually looks like, right? So what we did in this best our ability, we stripped out those numbers because we want to look at just the pure operations and not have it influenced by a bunch of stimulus cash. We also saw things, obviously sales channel differentiators, right? So still movement onto the wholesale versus tap room, because at that point in time, not all the tap rooms are open and full, and so take that into consideration. But then also looking at revenue growth. Revenue did grow significantly from 2020. Obviously, there's obvious reasons. People can sell as much, tap rooms are closed, yada yada yada. But we saw that growth, right? And so that obviously comes through in these numbers as well. So some data here. So the first thing we looked at was revenue per barrel. Great way of common sizing it. Looked at some data here. We saw the averages, right? So average kind of increased in 2019, a little bit more in 2020. It dropped back down here in 2021. So we want to look at that and say, well, why is that the case, right? Is that a volume issue? Is that a sales channel issue? What's going on here? Is that a revenue pricing issue, right? So we see that kind of overall trend data, and then we have the actual data here. And these dots that you see on the screen here represent different brewery sizes. So a bigger dot, a bigger brewery, a smaller dot's a smaller brewery. The one that's highlighted that says LCG Unfiltered, that is the Brewers Association numbers for the year. And so I'll just put that as a comparison point in there, but all those other things represent breweries. So again, looking at this from a high level here, we have a number of breweries on the right-hand side doing great. Revenue per barrel, some over $2,000 per barrel in revenue. That's awesome. Those breweries are tap room only. But that's awesome, right? They're doing something there where they're generating a lot of revenue for what they're selling. Those are kind of outliers, though. You see a big kind of drop here into like the 1,200 barrel, and then you see it all kind of shift downwards from there and kind of an even slope. And so what this tells us is, okay, there's obviously different sales channel things. The people on the low end are probably selling everything for wholesale. People on the higher end, more weighted towards tap rooms. But that data is important to look at, right? And so if I'm a brewery that's towards the bottom and I am not doing any wholesale, I got some issues to look at. And so we then broke that down and said, okay, if you're a distribution heavy brewery, let's look at you together. If you're a tap room heavy brewery, let's look at you together, right? So distribution, they're all kind of hanging around their lower end of the margin. The mixed group also hanging on the lower end of the margin. That mixed group was probably more of a mixed group pre-pandemic. In the pandemic, they shifted a lot more wholesale, right? They had the means to do that easily because they already, were 50% wholesale. They could easily shift more there. Then we get to taproom heavy breweries, and they're all over the place, right? So again, some doing great, some not doing so great. So if I'm a smaller brewery that's taproom heavy, not doing distribution, I am on the low end here. I need to really look at, okay, what am I doing on a pricing perspective? Are my prices too low? Um, am I giving away beer for free? What's my issue here? Because I have some really low revenue per barrels there. And so I need to work on that. And if I'm one in the middle here, kind of in the middle group, okay, probably could do a little better. Maybe I need to, again, raise prices, think about how I price in my markets and what do I need to do there. Looked at COGS per barrel here. Again, we have the trend, kind of went down from 2018, 2019, spiked back up in 2020. Again, packaging, big part of that, spiked up again in 2021. So obviously this in the benchmarking group, that's all going the wrong direction. But we kind of understand why, because of supply chain issues and higher packaging costs and harder to get cans, and we're trying to get cans in the market, and that's more expensive. Or we don't have a can in line, we're hiring a mobile canner, and that just added cost into our packaging. So we again see some ranges here, right? Again, a lot of people kind of sub 250, which is kind of where we want to be. For plus 250, that's not great. 200s is good. It used to be pre-pandemic, we wanted to be below 200 per barrel. But obviously we're all dealing with increased costs and trying to push things to wholesale, and that's going to increase it there. So where we have problems though is these people above 400, we got some issues. Now, one of those, the top two there, they both contract brew, and they sell things for wholesale. So they have a lot of costs coming their way. They have to package everything. They have to deal with contract brewer costs, right? That's really going to eat their margins. But if I'm in this one that's 400, number 6 down here, I still have a problem. And that one was not a contract brewer. Now this one, they just got cost overruns and they have not managed it well. And so that's a real kind of warning sign for them to say, I got to rethink about how I manage this because I'm not doing it well right now. And I have a lot of COGS costs that are coming through as a result. Gross profit per barrel, revenue per barrel minus gross profit per barrel, right? Looking at that as an average. You see that again drop pretty dramatically here in 2021. For reasons we already talked about. Obviously, if our revenue is being pushed to wholesale and it's more expensive for ingredients and packaging, that's really going to kill my gross profit. And we see that. But again, we see people doing well. Again, those ones at top, selling through the tap room, they don't have packaging issues, they're doing okay. But we see this kind of rush down there. Even the Brewer Association average, 451, right? That's fairly low, given what's going on here. But again, we can kind of talk about, okay, why are the reasons for that? And if I'm one of these individual breweries in this list, maybe it is those reasons, maybe it's different reasons, but I need to understand the why for my brewery. Again, broken out by type of brewery, distribution heavy, taproom heavy. Again, distribution heavy, they're all kind of at the bottom, makes sense. Taproom heavy, they're all over the place, right? We got some issues there that need to be addressed. Profitability ratio, your net profit margin. That's as simple as what it is. Caveats galore here. So 2018, 2019, decent, right? Not great. Again, I said 10% is a good target. We weren't there on average, but we were profitable, which is good. 2020, not profitable. Okay, 2021, profitable, but for reasons, and some of that was stimulus money coming through that caused that, or other grant money they got from local governments and things like that nature, right? So, yeah, profitable, but there was a lot of non-operating revenue in there. But again, we see a big drop. We see one way at the bottom there. That's a big outlier, but most people were hovering at the 0 or above. Again, okay. But we know there's some extra cash flowing through there that was kind of, goosing the numbers up a bit. So great. So we looked at those KPIs, and maybe those are the ones we're focusing on brewery. Those really high level ones. If we're one of these breweries at the bottom here who profitability is not great, my gross profit margins aren't great, my COGS are higher, my revenue's lower, what do we need to do to manage that better, right? And so that's where you as a leadership team takes that data and say, okay, let's focus on one thing. And maybe it is revenue. We're going to start with this there. We haven't done prices increases in a while, both in the tap room and wholesale. We're going to push those through because we need to, right? We have added costs. We haven't adjusted for that. We need to have that ability to take that in. So having some ways to look at it and say, we have a plan now, and then we're going to track that, right? We're going to look at our KPIs on a regular basis and see, okay, how we fix the issue. And maybe revenue per barrel is great. COGS still a problem. gross profit margin is still a problem, better, but still a problem. Right now, we focus our attention on the COGS side, or we focus our attention somewhere else to improve that KPI that we're looking at. And finally, getting help, right? So there's a lot of things in here. I don't expect all breweries to be financial experts. You may have some on staff, you may have some that are owners. That's great. But a lot of them don't, right? And so if you don't have the help necessary to do this, or help to get this done right, this is a great reason to outsource your accountant to a firm like ours or someone else who can do that for you, because they're going to be able to handle that data component, get you financial information, get you KPIs, and then allow you to manage your business using that information. So really kind of making sure that you have that expertise, right, and at hand, right? You don't necessarily need to hire an accountant on staff. That's a little expensive, especially right now in the accounting industry. There is negative unemployment, so it's even good luck trying to find an accountant that would work, in-house full time. So outsourcing tends to be a good bet. And again, that's just working with your CPA firm or accounting firm that can help you there, right? They're not outsourcing it to overseas, right? They're doing it themselves, but they're taking their expertise and giving you a part of it. So you get to have the higher expertise without the higher cost as a result. We have a few minutes left. I left a couple minutes left for Q&A. If you have any Q&A, drop it in the chat. Be happy to answer that Q&A that you do have. So just making sure we give some time for that. So if you do have questions, go ahead and drop in the comments. One question we got here is on cadence of reviewing KPIs and reviewing that with accountants. And so good question, right? So internally, you want to look at that on a monthly basis, especially if you have like a monthly leadership meeting. That's a great time for that. With your accountant, especially if you need your accountant to do the information or interpret it for you, monthly or quarterly is a good cadence. We do a lot of quarterlies with our clients. That seems to work pretty well. There are some clients who want a little bit more of a quicker cadence than that. For most people, quarterly is pretty good for what they're trying to do, right? So that's a good cadence. Again, it kind of gets you started on that. And if you need more, you do more. If you need less, you do less. But quarterly is a good cadence on that. It's just interacting with your accountant, making sure your numbers are good, making sure those KPIs make sense. That's all good there. Let's see if there's any other questions here, but I think we're almost at time here. If you do have anything else you want to reach out, our firm, I'm based in Chicago. Our firm is remote. We have employees across the country, but you can reach out to me directly, josh@lancecpa.com. Visit our website, lancecpa.com. We have some good resources on there regarding kind of some strategy items for breweries, some webinars we've done with a law firm talking about the kind of intersection of accounting and law and breweries, and some other good resources. We have a newsletter for our breweries called Fermented Strategies, where we put out some good information on a periodic basis there too. So feel free to sign up for that. And yeah, this has been great. Again, reach out if you have questions, need help, need us pointed in the right direction. I'd be happy to offer that assistance to you. And with that, enjoy the rest of the conference. Enjoy the rest of the sessions. All these are really, really great sessions. Big thanks to Andrew for putting all this on. And we'll see you all next time. Thanks, everyone.